What's up, everybody? Welcome back to today's episode of the Indy Investor Pod. This is one of my favorite ones to do because it gives everyone a glimpse of what's going on in the crazy real estate market specific to Indianapolis and the surrounding areas. So, as always, I've got Gloria Gear here with the Gear Real Estate Group. How you doing, Gloria?
I'm doing awesome. I'm honestly crazy is what I would put into perspective right now. I'm surprised to have any hair left at all with as crazy as this market's been this first quarter.
Yeah, absolutely. So I know last time we hopped on here, we did our quarter one update. So this is going to be kind of a glimpse of what's been going on here in Indianapolis for quarter two. And then we'll kind of continue this throughout the year. But before we kind of dive into, the stats that we're going to kind of show everybody here, Gloria, kind of just tell us, what have you been going through personally with, investors you've been working with and other clients? Maybe the good and the bad that you've been seeing in this market this quarter.
So what I've seen is a sharp, dramatic increase in prices and a ton of competition on every single house out there in the retail market. This is for investors in the lower end with the $50,000 to $70,000 properties, and this is for my retail people in the $300,000 range as well. So basically, every single house has multiple people putting offers on it. This could be other homeowners, other investors. This could be corporate investors. Most of them are going over list price with multiple offers within the first 2 or 3 days of being listed.
Yeah, I mean, I've definitely been hearing stories. People are waiving pretty much all contingencies. Like I said, over ask price. The seller can stay there, past closing for a month rent free, and it's not just Indianapolis. It's kind of just happened everywhere, but it's pretty nuts at the level it's at right now. To being an agent like yourself, I'm sure that navigating through all these deals and putting all these offers is probably a little bit of a stress to you.
Yeah, a
but
little bit. Yeah, just a little bit. I
but
know.
it is good that you are in your client's corner, and you're out there and you're making it happen, because you overall you've still been pretty successful in getting your clients properties they've wanted, right?
Yeah, so I will say my numbers are a little bit low. I mean, I hate to put this stat out there, but I've written 23 offers in the month of May and I've only won 3 of them. But I mean, my clients are doing exactly what I'm telling them to do. They're putting extra wording in there. They're putting the extra offers, like you said, on the table, extra things to sweeten up the pot, even more than just money.
Mm-hmm.
And there's just other people that are doing more. So I wanted to give you one example. So this one's in my favorite neighborhood of Eagledale. And I think I'm going to put it out here right now to the Indy investor pod world that you all need to just stop buying in Eagledale. I want it. I want it for me and my clients. So anyway, there is this property in Eagledale, needed a lot of work. It was listed for $70,000. My client offered $80,000 cash, 2-week closing, offered possession 2 weeks after the closing. They were going to pay all of the owner's closing costs. They also were going to pay all the property taxes for the year. So absolutely everything they possibly could. We did not win the offer. The agent came back and told me that she had 41 showings and 26 offers in the first day, and they were all over list price. So it's just a little bit brutal out there. And so what I've been telling all of my clients is we just have to have patience. But then at the same time, as soon as we find a deal that we want, you've got to be super aggressive. So patience aggressive, patience aggressive. That's just basically kind of the mantra for how real estate is happening right now.
Yeah, no, for sure. And especially like on my end of things and like the wholesale world, we're dealing with the same competitiveness, just on a different side of things.
Mhm.
So, obviously, like we're always out there, trying to find off market properties for our investors, and so is everybody else. But because of how things have been selling on the market, um, these homeowners see that too.
Mhm.
So us coming in as like, hey, we know we're going to buy your home for cash. Would you take this offer? Like, oh no, like that. My neighbor sold their home last week for, 15,000 over list price. I at least want to get what they were initially asking, and it makes it harder on our end to kind of like educate them on, because we're coming off on the convenience route, right? Like, hey, you don't have to
Mhm.
worry about all that madness that's going on in the market. But on the flip side, like, when we do get a house under contract, initially it's like to investors, and not just us, but other reputable wholesalers around Indy, like our properties they look like they're kind of overpriced for a wholesale deal. But after, and we'll get into these numbers, after kind of you go through these numbers, you'll see how things are appreciating so quick, where it's like, well, after, by the time you buy this property and you put in the work, and then if you either flip it or if you get a refi, like it just in a few months, that property ARV is going to increase a little bit, each and every month because of the activity we're seeing. So, um, I've just called it the Wild West. It's the Wild Midwest.
Yeah. Yeah.
So that's kind of what I've been seeing on my end. But I know you've got some good stuff for us to kind of go through. Just some stats that everyone can kind of digest and take note on. So I'll kind of turn it over to you and kind of let you do your thing.
So this is just some stats that come out from MIBOR. So MIBOR is the Metropolitan Indianapolis Board of Realtors. And so they're the ones where all the retail sales go through. Some wholesalers do put their stuff through here as well, just, just so that they get the record of what's out there. But a lot of times the wholesale deals aren't going to be on here. This is going to be all of the sales for anything that went through the Board of Realtors. So these are stats that they put out for the month of May. Now, I will tell you that today is June 4th. So they usually say that these numbers aren't set until the 10th of the month afterwards, but these are pretty close. So I just kind of want to show you what's going on. So the screen that I have up right now is Marion County. So it's all the townships in Marion County. So Indianapolis, for those of you that don't know this, is Marion County. So Marion County and City of Indianapolis are the same thing. Right now, it's telling us that the median sales price is $210,000. Now that's up 5% just from last month, And I'm going to show you in a little bit what it's up from a year ago. So this month, 1,283 units sold. So it's up 2.4% since April. So if you look right under there, though, the new listings on the market are 1,532. That's down 12%. And then if you go over to the other side of the screen, active inventory. So all that's left right now is 778. Now, this is single family properties. I didn't put duplexes or multifamilies into here. So you can just see how quickly they're going. So we've got 1,500 new listings put on. Half of them are sold already. Average days on the market right now is 18. Okay. So, and that includes everything. Like sometimes it doesn't get listed right away, or sometimes it already went pending and they didn't get it in there right away. So yeah, right about 2 weeks mark, and that's down
really low
5%. That is very, very
Marion
low.
County.
Yeah. So, and I've been told, so I've only been in the business 5 years, but some of the people that have been in for 30 years or so, they say that a balanced market is 3 months worth of inventory. So average days on the market being less than half of the month. I mean, we literally have 2 weeks worth of inventory out there right now for everybody that's looking. Price per square foot is $143 per square foot, and that's up 7% since last year. So I went ahead and kind of ran these same stats for the counties surrounding. So I know that most of our investors that watch Indy Investor Pod are just concentrating on Indianapolis, but I wanted to show you the suburbs too. So this one is Hendricks County. This is out where I live. The cities out here are Brownsburg, Avon, and Plainfield. Median sales price here is $280,000. So think this is more suburbia. This is Vinyl Villages. This is nicer houses, bigger lots, that kind of thing.
So real quick, for the people that may not know the counties, like just like let them know like what cities or towns that involves.
So I live in the city of Plainfield. Actually, I live halfway between Avon and Plainfield. So Brownsburg, Avon, and Plainfield are the ones that are on the west side of Hendricks County. They're the ones, we're only probably about 6 miles from the border of Indianapolis. So when you're driving, you can't tell where Indianapolis ends and where Hendricks County starts. And then there's one more big city, it's like a small town called Danville that's a little bit farther out west. And then the rest of Hendricks County is pretty rural, a lot of cornfields and a lot of rural out here. So I would say I left all of Hendricks County in, but I would say most of this is Brownsburg, Avon, and Plainfield is what this number's coming from.
The big three out there.
Yeah. So if you see 271 sold, we got 272 that came on the market, but only 78 are left. So it's just nuts that there's just not enough. And we do have A-rated schools out here, so a lot of people want to live out here, and
Mhm.
it's just hard for them to find. So if you as investors, yes, the price point is going to be a little bit higher, but if you can find one that is especially a 3-2, families really, really want to be in these school districts, and they'll pay higher rents for this area.
For sure.
11 days average on market, so it's even less than Marion County. Average price per square foot is 139, which that's down a little bit since last month. Johnson County is on the south side. Okay. So if you think, a lot of you know Bates Hendricks Fountain Square, if you go south of there, we have our townships of Decatur, Perry, and Franklin. And then just under that is Johnson County. Johnson County, the main city is Greenwood.
Mhm.
Again, it very much, you're driving south and you can't tell where Indianapolis stops and where Greenwood starts.
Right.
Median sales price there, 271. That's up 8%. 262 sold in this county last year, 200 new ones on, but we only have 92 left. Look at that, less than a week on the market. So very hot, very, very hot areas. Then we're going to go up to Hamilton County. So Hamilton County is the most expensive part of Indianapolis. So your towns up here are Carmel is your main one. And then you've got Fishers, Zionsville. Up north is Westfield. There's a lot of development going up there. And then a little bit farther north, you have Noblesville.
Mhm.
So all of these are high developing areas. And I would say that a lot of these that are sold up here are all new builds, just because there's just a lot happening in these areas. So 664 sold, kind of looking at the same numbers, 655 came on the market, but we only have 220 left for people to buy. And again, I think a lot of these that are on here could be new builds that they're in the middle of building. 370,000 is your average price point up there. That's why a lot of people for investors don't buy in this area, because if you're going to do long-term hold, you're only going to get about that $2,000 rent, top. If you
Yeah.
can find something that needs fixed up, it's a great flip area. But this is, I mean, with 13 days on the market, a lot of stuff up there is going $20,000 over asking.
Yeah.
So that's what's happened in Hamilton.
Yeah.
Any questions you have on any of those overviews or any comments you have?
I mean, it's especially like, I mean, Hamilton, but then that last one you showed, Johnson County. So we do a lot of stuff. We don't, I guess for our business, we don't typically go south of 465. That's just, I don't know why, but like we don't get many leads in Johnson County. But when we do, they sell fast. But I wasn't aware of how, like, 7 days average days on market for basically Greenwood. That's basically
Yeah,
Johnson County.
yeah, it is.
I was surprised to see that. But I think across the board, just seeing, just it's kind of eye opening seeing like the new listings versus sold listings. It's like
Mhm.
those numbers are so close together. It's like, it's kind of, it's there and it's gone, right?
Yes.
So it's definitely tough. It's definitely tough to navigate that. But I mean, how would you, so when you see all these numbers and, the people are listening to it, like how are you telling people to kind of navigate this and kind of like strategize through this? Is it just, hey, just make as many offers as possible, or,
Mhm.
to try to find like the pockets where maybe there's not a lot of activity going on, or kind of what's that conversation like with them?
So yes, a lot of times it's, we just have to keep throwing offers out there. Something's going to stick eventually.
Mhm.
Some of it's like we talked about in first quarter, is a lot of 2021 is going to be pivoting. So my investors that were buying out here and getting closer to that 1%, they're just not making those numbers anymore. So let's go find another neighborhood where the numbers maybe will work, or let's pivot our strategy. Since these prices are going up so high and there's nothing there, still, like, first time homeowners, they want these houses perfect. So if
Yeah.
you can go out and you can find a distressed house, you can fix it up for them, you're going to make it. You're going to make bank on these houses, because it is going to sell. It's not a matter of if it's going to sell. It's going to be a matter of when it's going to sell pretty quickly. So maybe it's changing the strategy and doing more flips instead of holds. So I don't want to discourage people of, oh, these prices are so high, because if you think about it, compared to a lot of the rest of the country, these numbers are still good,
Yeah.
So, it's not like what we're used to seeing, but still at the same time, this $271,000, that's probably like a 4-bedroom, 2.5 bath. Like, 2,000 to 3,000 square feet. And you're not going to find that in other parts of the country.
Right.
So I think it's just a matter of persistence and just keeping at it. And then eventually one's going to work for you.
Yeah. I think, now that we're in quarter two of 2021, I remember talking to people back in fourth quarter last year and even first quarter of this year. They're just like, you know what? Like the market is just, it's stupid. Like it's way too competitive. Homes are flying off the shelf for way too much. Like I'm just going to wait until things kind of level out. And now, so that was like November, December. I started having those conversations with my buyers. And then now we're in quarter two and like things have not slowed down. They've only sped up. So it's now you, at least I'm doing this. I'm sure you are with your buyers like, hey, nothing's changing and it's not changing anytime soon. So let's talk about a new strategy and let's rework your numbers and your criteria to make you like, there's a lot of still successful investors in this market because they, like you said, they're pivoting and they're changing things up and they're just rolling with the market. We're doing it. You're doing it. So I think now those people that are like, oh, let me wait. They're kind of getting some FOMO. They're on the sidelines. They're seeing their buddies still doing the same thing they've been doing, but they pivoted their strategy a little bit to reflect the market. So, would you agree?
Yeah, because I'm thinking those same buyers in December, those houses are up like, and I'll show you that here. Those houses are up like 10% just since December.
Yeah.
So I get asked this question all the time. Are we in the middle of a bubble? And I talk to the lenders and everybody's saying no. That, the problems that we had in 2008, 2009 are not existent anymore.
Different problems. Yeah.
Not there. It's a completely different problem. It's an inventory problem. So for instance, like these people that are saying, yeah, I want to sell my house, but I don't have anywhere to move to. So the builders right now are telling me 9 to 12 months out. They're telling me we're not building basements anymore because the concrete people can't get cement. The lumber prices, one builder said in a seminar I went to a couple weeks ago, his lumber package is up 400%. His electric and his plumbing package is up 300%. So what's happening with these is because of COVID, we've been backed up because the sawmills weren't working. There were fires in California. So the builders are backed up. They can't build fast enough. So the people that are selling these mid-level houses that are what our investors and our first-time homeowners want can't buy these houses because those people aren't selling yet because they can't move to another new build yet. So it's just kind of backlog there. Forbearance, every time I talk to the lenders, none of them are seeing any issues going on with forbearance. What they're doing is they're tacking that forbearance on to the end of the loan instead of foreclosing because they'd rather keep the people in the properties.
Yeah.
And then as far as like COVID related stuff, if you look at unemployment in Indianapolis, we're less than 4%. But honestly, I don't think that's a good reflection. When I drive down, I live near the airport. There's tons of distribution centers here. Every single one of them has a help wanted sign on. Every fast food restaurant I've gone to. I went to Burger King the other day and they came on the speaker and said, hey, be patient with this. There's only 2 of us in here. This is like 3:30 in the afternoon. Where are the high school kids?
I've seen it too. Yep.
So it's the unemployment is less than 4%, but honestly, anyone that wants a job can get a job in Indianapolis. So our unemployment is great. We've got tech companies moving here. I'm actually going to be doing some more podcasts about this later about just the diversity of the economy of Indianapolis and how strong it is.
Yeah.
So no, in Indianapolis, I don't see prices going down. We'll see if it stabilizes eventually once the sawmills and stuff get caught up and we kind of, can stabilize a little bit. Maybe the mortgage rates will go up. But no, this is not a bubble. It's gonna hopefully stabilize, but we're gonna stay here. So if you want to invest, jump in. That's what I say. So this chart that I have in front of you, this is Marion County. And this is just Center Township. And then I have another chart that tells about the townships. But this is kind of cool because it kind of breaks down the different price ranges. So under 50,000, there were 26 that sold in the month of May. 50 to 99,000, there were 57. 100 to 200,000, there were 92. So that's kind of the sweet spot right now of what people are buying. And then 40 there, 50 there. And then as we get bigger, there's only one that sold for over $1 million. So that is up from a month ago, 1.4%. And it's up 34.5% since last year. So that's how many houses were sold.
It's crazy.
So if we go median sales price, bear with me, let my computer catch up here. Come on, let's load here. Of course, it wants to go really, really slow when we're in the middle of this. Okay, so it's popping up there. So 174,450 is the median sales price.
And
It's
again,
up
this is just
this is
center.
this is just Center Township.
Yeah.
Okay, so this is the center of downtown. So
Mhm.
if you think of Indianapolis as a tic-tac-toe board, this is the square completely in the center. So this
Yeah.
is Center Township. So this is where you think ghetto areas, sometimes, or
They
I
all
mean,
fall into this. Yeah, they all
yeah,
fall into Center Township.
yeah, all of this where a lot of our investors are looking are right here in Center Township. So would you have believed 174,
Nope.
450 is the median price in that area right now? So up from last year, no, just from a month ago, our average price was 155. We're up 12% since a month ago. We're up 24.6%. So this time last year, now again, think we were just coming out of COVID, out of that initial lockdown. So $140,000, we're up to our median price is now 174.5. So that's what the prices have gone up.
That's
So
a that's a huge win for Center Township.
yeah. So anybody that bought last year during COVID, you were the smart ones because you've automatically gained 25%.
Yeah.
So price per square foot, and again, it's so slow. I'm sorry. It's coming up. It's really tiny there, but it's $135 per price per square foot. So this is kind of a good guideline for you when you're doing your flips, when you're finding your distressed properties. You're going to do AR, even for you guys that are burring out there. This is kind of a good average of what price per square foot is. So if you think about it, $109 per square foot. So 1,000 square foot house. Last year you were selling for 109. This year you're selling for 135,000, and that's just in 1 year.
Yeah.
So, and again, this is all Center Township. Percent of list price received. So I like to show this to my investors that are like, I'm going to come in and I'm going to lowball and I'm going to come, 20% under list price. Sellers right now are getting 97.6%. Okay. That's up 23.5% since last year. So just know again, like you said before, the sellers know this. So they're not going to take low ball offers. They know they can wait a few more days and get the price that they're looking at. Cumulative days on market here. It's telling me one. I don't think that's right. Let's wait a second.
I mean,
it is saying 1
it
day.
says one.
You only have 1 day on the market. That's it. There it is, 45 days. Okay. So, and again, this is a little bit more than some of the outskirts of town. But again, look from last year, 64 days, 58 days. I mean, this is typical. So, I mean, even in Center Township. All right. So let's go to the, what I did with this was all the multiple townships around the circle. So I did Washington on the north, Pike and Wayne on the west, Decatur, Perry, Franklin on the bottom, Warren and Lawrence on the right. So basically your tic-tac-toe board, I did completely around. So 948 closed sales. So of the breakdown of this, you can see this is a little bit different from Center Township. So we only sold 10 in the month of May under 50,000. We sold 41 under 100. Okay. So most of your properties, 300 over between 100 and 200, 345 between 200 and 300. So that's what your townships are doing right now, those outer townships. So you're not going to be able, if you're looking under 100,000, you're going to have to come inside the circle again to get more of those. So, and then you see there's a few of the higher ones out there. Let's go to median sales price. And again, this is the whole outskirts of town. So, it's a pretty big range, but honestly, all the way around town is very similar. So we're looking at 220,000. That is amazing to me. I don't know if that is to you, Randy, but
it is.
this price, these areas used to be 125, 135. So we're up 17% since last year, 187,000. I used to quote in all my scripts that these areas of town would increase 3 to 5% year over year. We're increasing 5% in 1 month. So 17% since last year. So if you had houses in here, you're picking them up. Again, most of the time, my flip people were looking downtown Bates Hendricks Fountain Square. Maybe we should look to the townships. Again, it's just fixing them up and making them pretty. Most of them are built in the 70s, 80s, and 90s. So it's not
Yeah.
like you have big electrical and plumbing issues to deal with. It's mostly cosmetic, that you need
Yeah.
to deal with.
Yeah.
So let's see. Sold price per square foot. So again, this one I like to show because it shows you a good just a good idea of what your ARVs are going to be if you're burring or flipping. And we're moving slow again. Yeah, I got a joke to tell us, Brandy, while we're waiting on this. There we go. 146. Okay, so we're up 25% since last year. And then percentage of list price received. This one's pretty cool. 102.6%.
I believe that.
So if you had $100,000 house, you're gonna get at least 102,000 on it. And that's minimum. So
Yeah.
like when you're looking down in those price ranges, those 100 to 200,000 ranges, seriously, I have not seen houses go. I've seen houses going $20,000 over.
Mm-hmm.
So if you're bidding in those price ranges, you have to think that's what you're gonna need to do. Cumulative days on market. Again, these are lower again than the center of downtown. So I don't know why it automatically flips to 1 day.
That's how hot the market is. It's telling you.
It's just 1 day.
Like, hey,
Yeah,
I'm
you
just
have 1 day
guessing
to
one.
make all your offers. So 11 days. So again, that also is telling you how much inventory we have out there. So this time last year, it was a month, and we thought that was crazy. So now we're literally in these areas. People are wanting to move to these areas, and you've got basically a week and a half's worth of inventory there. So what I'm finding mostly is a lot of the realtors are doing is they are listing the houses on Thursday night or Friday morning. And then they're saying we want highest and best offers by Sunday night or
Yep.
Monday morning. And then that's it, so they'll get as many people through as possible over the weekend and then they're gone.
Yeah.
So for investors, I would say if you're looking on the BLC, that's another word for MLS, you need to get on there and be searching on the weekends. That's when you're going to find the properties. Now,
For sure.
we'll see, we'll just see how the summer goes, but it's, and I don't think we should stop investing in Indianapolis. I think just keep going, keep throwing offers out there. You're going to win something eventually, because if they're going up this much, we'll see. I mean, we've got a lot of people moving to the area, a lot of new businesses coming here. It's sustainable. I mean, we're going to still keep going up. So
yeah, no, I love that. And that's a lot of great information to go through. And your team is like, how often are you pulling this data? Like you and your team?
we usually pull it once a month. But we've been kind of kicking around some ideas of doing this a little more often. I didn't drill down a whole lot today, but I can really drill into specific townships, especially. That's easy to do. I can do zip codes. I can do neighborhoods on a certain level. I can pull these stats from price ranges. So I've got a new kid that I'm talking to that I'm thinking about hiring him, that he's a data analyst is what he's going to college for. And he kind of wants some experience in this. So I'm hoping
That'd be
I can
perfect for
maybe,
him.
I know, just throw some of the stuff at him and kind of, have him pull some numbers for us. And he wants to be an investor himself once he graduates from college. So
Okay.
we'll see. I mean, stay tuned. I think we're going to try to do a lot more with this data stuff
Yeah.
for the guys that are interested.
And I asked that because I do think you and your team do a really good job on just making people aware of what's going on around Indianapolis, especially like with your personal clients and buyers that you work with. But I never like come up here and like promote anything, but like if anyone's really, if they don't have someone in their corner like Gloria does, like you have your weekly and daily emails that go out to your buyers because you're monitoring these numbers and you're sending them lists of properties like, hey, this is on the market. And I know my numbers. I know these areas
Yeah.
are appreciating. Like, you
Yeah.
need to like take a look at these rather than scouring through hundreds of listings in the MLS. It's like, hey, here's my top 10.
Right.
Go ahead and like take a look at these. Here's the photos. Here's the breakdown. So I would suggest if anyone is working with an agent or is not, but not getting that kind of service, definitely find someone who does, or just reach out to Gloria directly. And I'm sure she'd be happy to get you hooked up on those emails. So we are, we're towards the end of the show. A lot of data. I'm sure, I'll listen to this episode again and take more notes, but any last words for Q2 in Indianapolis, Gloria?
Like we said at the beginning, it's crazy, but it's exciting times. I mean, it's exciting to see all the growth happening in Indianapolis and all the new businesses coming here. That the housing market's just kind of supporting that. The rental market's going to be coming up right along behind this and catching up with it. So to me, it's exciting times. And yes, we could say, oh, I wish I would have jumped in before. But if we wait another year, we're gonna still regret that we didn't jump in. So
Yeah.
water's fine. Come jump on in with us. We'd love to help you. Like Randy said, my team and I work really, really hard to try to kind of hone in on these numbers and give you what you need. And we would love to be able to help you as well. You can reach me. My Calendly is Gear Group. That's the best way to schedule an appointment with me. My phone number is 317-750-4998. And my email is gloria@gearregroup.com. And just to make it clear, I am part of the Simple Quarters team. I'm just the retail side of it, and I'm running the Redbridge Real Estate. So anytime you see Redbridge Real Estate, it is still part of Simple Quarters, Simple Wholesaling. We're all a great big family under one umbrella, and we really enjoy working together.
Yep, absolutely. And then if anyone has any questions for me, it's just randy@simplewholesaling.com. Feel free to reach out anytime. We'll do what I can to help out. But that is today's Q2 episode of What's Going On in Indianapolis. Thanks for listening, and we'll see you on the next episode.